HealWell and WellStar have been making waves with innovative AI solutions and healthcare technology advancements. With transformative acquisitions and significant funding, these subsidiaries are redefining their roles in the healthcare space. And today, we are joined by CEO of Well and Chair of HealWell and WellStar, Hamed Shahbazi, to explore their progress and strategic vision for 2025. Thanks so much for being here, Hamed.
It's great to be with you.
Let's first talk about HealWell's recent acquisitions, Mutual Health Solutions and Orion Health. So, what does this mean for your AI strategy?
HealWell generally has a capital allocation program that's focused on two key areas. One is really beefing up our AI capabilities in terms of intellectual property, in terms of just competency, in terms of algorithms, and the ability to kind of have the IP to build out these co-pilots. And then the other type of acquisition that we have is essentially distribution points for our AI, places where we can competently deploy our AI capabilities and drive creative benefits within those assets. And so Orion is a global health data interoperability company. It helps major health systems like the NHS, like our own provincial care providers here, such as Ontario and Alberta, with really collapsing those data silos and building those significant data lakes that allow for a single kind of unified view of the patient in terms of the dashboards that are provided to clinicians. And so they have 150 million lives under their umbrella globally. They have offices and projects in 11 countries out there supporting significant public sector customers. And the ability to now add AI and be able to go to those public sector customers and say, hey, look, we already have your data. There's so much more that we can now tell you about your patients, about your citizens in terms of, and turn the lights on and let you know with much better clarity and fidelity as you intervene, as you launch education programs to tell you how those are working in a much more clear and actionable way.
WellStar was also recently rebranded and it received significant funding. So can you tell us, how does WellStar fit into your broader strategy here?
Sure. Well, WellStar is our tech platform at Well. It's been supporting our clinics. About 1% of all healthcare providers in Canada work for Well, and about 37% of all healthcare providers in Canada touch our digital platform. And that's WellStar, and that's a SaaS and services company. And actually, Well is a pretty small customer of that SaaS and services platform. And so, we have this great SaaS revenue that was being overshadowed by essentially $1 billion worth of care volume and revenue. And so it made a lot of sense to allow investors to be able to invest in the SaaS platform without having to invest in the care business. There's some purist type investors that really like investing in SaaS, and we have a phenomenal SaaS business in WellStar. It's been a rule of 40 software company for quite some time, so it's sort of growing at better than 20% organic revenue rates, and its margins have been consistently above 20%. And we announced before the end of the year that we're getting 2 tuck-ins done, and we've raised $50 million from 3 outstanding investors. I would call them sort of tier 1 technology investors here in Canada, Maurer, EdgePoint, and Pender. And so this essentially drives WellStar to about 70 million for next year's revenue, and that's without any more M&A. And so really that puts us on the march to with a line of sight to 100 million in revenue. And we'd like to get as close to that as possible before officially launching WellStar as a separate public company that will be majority owned by Well. And so Well will essentially have a publicly traded subsidiary, but it's great because it really allows investors to invest in what they like. If they like the clinic business, they can invest in Well. If they like the SaaS business, they can invest in WellStar.
That is great to hear, Hamed. And I also want to look ahead in this interview. What are your top priorities for 2025? And also, what trends do you anticipate shaping the healthcare industry?
Yeah. So as you're probably aware, we've made a significant investment in HealWell AI. So we are the largest investors, and we are on a path to control there. A big part of 2025 is us completing that path to control. And at some point in time, HealWell will likely become a publicly traded subsidiary of Well. So Well will have two publicly traded subsidiaries. That's WellStar and HealWell at some point in time in the future. So AI continues to be a big area of focus for us, and really continuing the growth of our platform, our primarily our care platform, which is continuing to not only grow organically but also inorganically with significant growth in clinic acquisitions and absorptions, and really driving up that free cash flow. This past year we were able to grow our free cash flow quite significantly over last year, with our guidance of sort of essentially being close to 30% in year over year growth, notwithstanding the additional interest costs that we had year over year. So, 2024 was very successful in terms of our growing our cash flow, and we want to continue to do that. We think that is really the key for Well is to continue to grow that cash flow per share, and really and become a major compounding story, to be able to deploy that cash flow back into profitable assets that we can continue to grow with. And and we believe that there won't be any meaningful dilution moving forward, and hopefully reverse dilution as we seek liquidity on some of our U.S. assets that may open up some more cash for us to increase our strategic buybacks.
Well, we certainly wish you the best in 2025 as well. CEO of Well and Chair of HealWell and WellStar, Hamed Shahbazi, thanks again for being here with us.
Pleasure to be with you. Thank you for your time.